going on, guys? Welcome back to the Digital Real Estate Channel. This is your host, Dre. Thanks for tuning in. Please subscribe to the channel, like the video if you do, drop a comment, and hit that notification bell so when that content drops, you'll be notified. Welcome back, everybody. Things have changed in the market. Let's get right into it. So our trend that we set up last time failed, that falling wedge. We broke even lower. We went below our overall ascending trend of the market. So here we are. We broke below that 35 line of support. We said to look for 30K. We stopped right here towards this yellow brick road, I'm calling it. That's the two lows from back in the summer. You had a 28.8 in June and a 29.2 in July. If you extend a trend line from there to here, this is where we're at. Then we basically created a triangle here. We've broken through that after we did test this area. If you look here, once we got that 4-hour close above this yellow line right there, you can see that's when the market pushed over, flagged over, and now is looking to ascend up more. Currently, we got somewhat of a double top shaping up here. I wouldn't be trying to get in a long position at the moment. I'll look for a retest down here of this support line, or even if this trend line that we're anticipating of what we're going to be seeing. I want to create a lower high here, or sorry, a higher low, excuse me. Definitely want to be a higher low. We had a lower low here compared to this low that actually touched the line just perfectly. Didn't set it up that way, it just happened to work out that way. So, but we did break below it, and so wanted to get some people out, some liquidations here, and then the market just saw higher from there. So that's where we're at currently. So we're on the 4-hour. Let's extend out of here a little bit. One thing that's eye-catching to me, when we created the dip and we bounced back up, the bounce was higher than the initial drop. So that's a good sign of bullish activity here. If you look back on all the drops that we previously had, if you look closely at each one, each time we went to bounce back up, the high was lower. You can even see here when we formed the W, we just kind of couldn't just break that resistance that we were setting. Although we did here when we hit the W, but then we just hit the major trend coming down. So you gotta, kind of put a couple things into play here when you're looking at these charts. You can see we got the short flag here, and then boom, down we went. We were hoping that this area here would hold support. It did temporarily, but there was no buying action, at least from any big players, or there, was, but not enough. And then the rest of the market just decided to sell out with some speculation of things to come. So it is what it is. Currently on the 4-hour, we are overbought. We have a couple different indicators up here just to show things a little differently, because I know things get boring just looking at trend lines all day. So that's where we sit currently in this market on the 4-hour. We're going to switch over to the daily real quick just to see how things are shaping up. And as you can see here, we had our huge head and shoulders, but created a higher low for now. This holds above here. We're going to be looking for 43. If we break over that, then we're going to our $54,000 target that we set back here when we kind of flagged over and then found our double top, and then we came back down and saw that area of support temporarily. But again, the market had bigger and better things to accomplish, and basically created this huge falling wedge that we basically have now broken down out of, and now we're trying to find more support here, and hopefully it holds up for the holders, and even just for the market's sake. There's nothing wrong with seeing 28.30 again, but then we have to make sure that holds up. I'd rather just see us create a higher low, which we currently have. We saw a good amount of volume come in compared to what we were seeing as we were coming down and trying to find support. There was just a lot more volume, and you can see even on that day where we perked up pretty nicely here yesterday, you can see the candle, this volume, really up there. So that's an indication that we had a lot of people come in and buy it up. Is it going to hold? Depends on what the plans are with those buys. They could just be pushing the market back up to kind of get people trapped, and they're going to be slowly scaling out now as we speak, and then they'll just drop the market back down either this line, then get ripped back in, or even push it down lower to get us to that $30,000, $28,000 range. So again, stay neutral for the moment. Don't go one-sided. I would at this point not look to short or long at this point. The long's kind of a little too late. You should have been getting in down here, especially since once we confirmed that and you broke past this open, you would want to set your long here about 35,000, and then at this point get out of that trade, because we're setting up a double top here, and then plus this initial top had that inverted hammer coming down. Sometimes can be a bullish sign, but if you look at it this way, this is almost like a shooting star, but with a inverted hammer with the green candle. A lot of times you'll get the red candle. But that's where we're at with this. I see basically a double top forming, and then we should either spill back down to $36,000 area. If that doesn't hold, then we're looking for a $34,000 area, and if that holds, get in a long position then, and then ride it up. And then if you're looking for a short, I'd be looking at a short in the $42,000 to $43,000 range if this resistance still. So that's where we're at. If you're looking to get into little daily micro moves, at this point, I think the short play is over, and that's because we've seen a bounce higher up than the initial drop on the resistance, and we haven't seen that in any of the other previous drops that we experienced. So that's usually a sign that things could reverse. I'm not saying they are going to completely, but for the moment, it is reversing. And if it holds up, then there was your sign that basically that bounce wasn't a dead cat anymore. And we kept getting these little small dead cat bounces each time. And when you see that, you have to anticipate lower. So don't get stubborn or anything. If you're not comfortable shorting, totally understand. Just kind of wait it out and look for that bounce up. Now, obviously you wouldn't have seen it, but you could have scalped in and then known that you were going to come back to your resistance line and then get out. And a few bucks, a $1,500 move with some leverage is a good percentage, gain. So, just be careful whatever you're doing. Don't get crazy. Before I let you go, let me check a couple things here. We got our balances on exchanges. We're getting that step down effect that I talked about. You can see we're about to make the next step down. Figure we're just going to probably match this area here of about 1.69 million. Right now we're at 1.71. Yep. So I figure another 2,000 coins should be coming off the exchange over the next couple of days, versus what's going on or staying on. And then when we finally get to the very top of the market, I'm anticipating somewhere between 1.5 or lower in the total amount of exchange. So we're going to drop probably 200,000 coins roughly, just say, before we hit that actual top of the market, and then we should start coming back down, and then there should be coins coming back onto the exchange, and anticipate that when we get up to our next top of the market. I don't feel the cycle's over. It's just taking us a little longer, but from the second low in March of 2020, if you take that and say 2 years and some months, you're talking the summer and fall months would be our top. So, I'm anticipating that. You can see that shaping up the market. Looks like possibly the market's going to continue going up here, but we'll wait to see. We're not going to jump into anything yet. Not looking to FOMO in, looking to position ourselves properly. And like I said, 34 area is where you should be looking to re-enter and buy. Otherwise, just let it ride out, and then when we get to resistance short, sell whatever your position may be. If you're looking to get out, and then grab more coins lower, that's the name of the game. Just keeping an eye on any of that information coming out that could affect the market rates. So if we get anything on that, we'll let you know. Otherwise, that's all I got for you today. Thanks for stopping in. Good to see you guys again. Take care now. Digital Real Estate is out.